What FICO score are you looking at in terms of, above 650? Is it above 580? Kind of what are you looking at?
We're talking about essentially a patient paying for a new car somewhere in that arena. You will actually need whether it's a super prime or even a prime FICO score. That arena is your 700 plus FICO score to be able to qualify for $20,000 to $30,000 plus.
Because money was basically free at that point, right? I got a loan before COVID and it was really the interest rate on a lot of money. I got a really big loan and I got it at an interest rate that I could not believe that they gave me money at that interest rate.
When times are good, across the board, everyone can flourish. But when things get a little tight, then...
What our rate sheet, Margaret, is actually designed with consumer behaviors in mind. We also have those interest rate sensitive customers that I will not pay over a certain percentage of interest rate.
Welcome back to this special edition of the Full Arch Advantage podcast. I'm your host, Gary Bird. I'm the founder of SMC National, where we help you create, convert, and close more full arch cases so you can grow the way that you want. And today, this special series is really going to help you grow because we have a special guest who is going to be working with us with several of our other guests, and her name is Margaret. Margaret is the founder and chief advisor of i3 Ignite and is an implant marketing and operational genius. She actually was the former Clear Choice COO for many, many years, and she helped them scale from the ground up. So this is going to be a set of shows that are really going to help you and your practices grow around full arch. And today we have Michael and Johnny, who are from Lake Liberty Corporation. And you're going to want to tune into this one because we got a lot of information that's going to help you grow your practices. Stay tuned. All right, Michael. So why don't you tell me what you are seeing right now in the full arch space? Because there's a lot of things going on. First of all, you have interest rates are super high. You have inflation that's hitting the offices. So offices can't afford things like they normally do because it's just squeezing all of their margins, as well as the patients, right? Gas is high. Everything that they're buying at the grocery store. I don't know if you've gone to the grocery store lately, but everything seems to be double or more the price that it was just 6 months ago. And so I would love from your perspective, how is this impacting financing and people having the ability to be able to get full arch treatment?
It's a good question, Gary. So we're all affected, and we're affected in this market due to the monetary policy. Recently, we received a little break from the Federal Reserve when they did not go up in a rate hike. Yeah. But news should actually be coming out this week, so we'll see what happens there. The reality is that because the rates are high, banks and lenders, it actually costs them more money to essentially have money to lend out. So in these cases, although money is available, we have still a ton of money to lend out to patients so they can receive the care that they need. But in these cases, it's just very important for patients to make sure that they have good FICO scores, good money management, because in these cases, if you have a higher interest rate, the payment may be slightly higher. Yeah.
Are you guys seeing that?
So, Michael,
go ahead, Margaret.
Uh-huh.
Oh, I was just going to say, so what FICO score are you looking at in terms of, is it, above 650? Is it above 580? Kind of what are you looking at?
That's a good point, Margaret. So for your higher cases, we're talking about full arches, right? So you're talking about $25,000 plus, $40,000 cases. We're talking about essentially a patient paying for a new car somewhere in that arena. You will actually need whether it's a super prime or even a prime FICO score. So that arena is your 700 plus FICO score, 700, 725 plus to be able to qualify for $20,000 to $30,000 plus.
Hey, I got something crazy to share with you, and I'm going to get you right back to the show, I promise. So we have an event called AlignerCon coming up next year, and this month we're giving away a buy one, get one free. We're going to be partnering with Clear Correct, and this is going to be one of the biggest events that we've ever done in Nashville, Tennessee, in the biggest hotel in America. If you want to come to this, again, we're going to give you a buy one, get one free. We want to meet you in person. Just go to alignercon.com, and we're going to teach you how to create, convert, close, and even some clinical components around clear aligners. So don't miss this event. Go check it out now. Back to the show.
So is the interest rates actually impacting sales right now? Have you guys seen it to where less people are getting full arch financing through you guys because the interest rates are so much higher?
You know what? It plays a role. We are seeing strong numbers on our side, but there has been a hit. It's not similar to before COVID. Just being quite honest.
Yeah.
But
because money was basically free at that point, right? Like money was. I got a loan before COVID, and it was like it was really the interest rate on a lot of money. I got a really big loan, and I got it at an interest rate that I could not believe that they gave me money at that interest rate.
Mm-hmm. No, it's exactly right. So when times are good, then across the board, everyone can flourish. But when things get a little tight, then naturally you're going to squeeze a little bit, and then fewer people would receive an approval in that case. But as I said earlier, we still have a lot of capital to give out. It's just
and that's what I was just going to ask. Michael, you all are still lending, though, to those single and double arch cases, and that is not universally true of patient financing companies. That their number have backed off totally on any loan over, call it 13 to 15,000, maybe some as high as 18. But you guys are still lending?
We are still lending, high ticket. So we finance up to 55,000, and $40,000 cases are still coming through. And one of the major reasons for that is we are a bit different. We have multiple lenders, and we try to remain aggressive and open in that respect to find partners that will continue to finance patients. So we're going to continue on this journey and continue to find great suitors. But I want Johnny to chime in
it's
there.
It's a good
Sorry.
point, Dad. So there was a time that we went down to 540 on the FICO score. That's subprime. Like Michael mentioned, we have super prime, we have prime, we have near prime, and then we had subprime. It's tough for a person to have subprime to get a $50,000 loan, right? That's going to be really tough. We would still do 10,000 and below, but we could not go to 50,000. Then with the interest rates hikes, we went from 540 FICO score as a low up to a 580, right? It impacted us. So then we had a big group that they got dropped off. They was not going to get a loan. And just about 3 weeks ago, we went from subprime of 580 to now 640. So we're affected just like everybody else. So now the FICO score approvals are from 850 to 640. But this is important. Every company out there, no lender wants to lose money, right? And so that's a part of the pullback of everybody's in the same boat of, well, I don't want to, because this is really true. Everybody you lend money to is not going to pay you back, right? That's something that lenders have to live with. And it's a big risk. So lenders are constantly, we'll finance it. Practices are getting paid. Within 24 hours, we're constantly giving them money. But at this point, if we have a bad month of $200 million, $300 million, you're going to go out of business, right? And so the realities are we're looking at everything very, very closely. And here's another point. A person can have 850 FICO score and have something in collections. And I can tell you right now, they're not going to get a loan just because their FICO score is 800 or 750 or 825, because the idea here is, well, if they borrowed money from Margaret and they did not pay Margaret back, it's possible they will not pay Gary back as well. And so you want to take a look at that, just like if you was loaning money out of your household.
Got it. Margaret, I know you had a couple of questions that you wanted to tee up for these guys. Could you go ahead and set them up and break that down of what you're kind of seeing on your side and help the audience understand your point of view?
Great. So having done over, thousands of consults for full arch and double arch cases, I kind of found people broke up into two camps. One is the person who wanted the lowest interest rate they could get. And they were very interested in, for example, Care Credit's 0% interest product. So the other camp then is more concerned about the payment amount. And they basically want to know it's going to be like a car payment every month for X number of years. So how do you think about what's most popular today, and what are people really, in this newer rate environment, what are people migrating towards?
Margaret, that's a great question. So we broke it down into multiple customer behaviors, as we call it. So you have, as you mentioned, you have patients that they have a really tight budget. So the monthly payment is something that they're going to look at before they make a buying decision. Then you also have your patients that are looking at the interest rate because they understand that you have the principal amount, which is the loan, and then you have an interest amount, the APR, which is extra that you're going to have to pay along, with the loan. And then you have patients that are looking at the overall term. So it is very important because for them, the patients that have the money, they're going to pay it off right away. But in these cases, it's very important to essentially explain the treatment plan with the patient and then discuss that overall amount depending on what their behavior is. We actually have multiple loan products, and what we like to do is leave it open-ended for the patient. So whether a patient is excited about a same as cash offer or a longer term sort of loan. Also a patient that says, I need this payment, right? It has to be, for example, $500 a month, or else I'm not going to move forward with the treatment plan. Patient that says it has to be, or 700 is my highest amount, or else I'm going to be tapped out. Those sorts of things are very important. And that's why we have multiple options for them to give practices the highest probability for patient acceptance.
I'll tell you that with our rate sheet, Margaret, our rate sheet is actually designed with consumer behaviors in mind. We have 3 areas that we typically see customers look at. These are your transactor customers, like you say, I normally pay cash. We also have those interest rate sensitive customers that I will not pay over a certain percentage of interest rate. And then we also see another group where these are just payment sensitive customers that my cash flow is this. And so if I can fit it within that budget, right, I can take care of that. And so as Michael was mentioning, we have 9 different loan products, and we can guarantee if a customer borrow from us that their payment could be as low as 2 cents per dollar borrowed, right? And we can go out 12 years. And so this is something that customers look at that of, wow, I only have to come up with 2 cents out of every dollar borrowed. This actually fits in pretty much anything I could do. We used to start out at an interest rate of 2.99%, and our highest bracket was 19.9. Obviously, with the interest rate high, we cannot give 2.99% anymore. Those were the days.
Those were the days.
We can guarantee if we have practices that work with us, merchant fees as low as 4%. And so it's a big deal. We actually give a lot of money back to the practices, and we do a good job of accommodating patients. I want to say under 25,000, we're closer to 100% on accommodating those patients. Above that, obviously, 50,000 is nowhere near 90 to 100%. Is more like what Michael, 50 to 60%. Maybe 1 out of 2 will get funded for $50,000. But we do a great job day in, day out.
Yeah. So you guys talk with a lot of people, and you've, I'm sure, been in a lot of consults. What do you think is the best language you've heard consultants or TCs or docs use to offer patient financing? Like, what's the magic phrase?
You know what, Margaret? Out of all that we've spoken to, I don't think there's a secret sauce. Haven't heard that magic phrase, so to speak. But the ones that I've seen that have been more successful are the coordinators that explain the treatment plan, which is the value of what the practice is offering, And then when the patient financing side comes around, if that patient does not have, cash to pay it all up front, they present them with options. One thing that we've noticed is you have practices out there that have decided we're going to use this one financing company or this other financing company and base it solely on a merchant fee. And we think that's a mistake. We believe that for the interest of the patient, that practices should always have multiple options available so that they can accommodate the patient and the patient gets into a loan that they're comfortable with. Because if it's a thing of only the interest of the practice, then obviously the patient's not in mind in that respect. And then, of course, you're going to see a lower acceptance rate for your patients.
Margaret,
So a lot of
no, just to piggyback, probably the best
Johnny.
word is financing, healthcare financing, dental financing. That's probably the magic word. Because there's no other way to say it is, hey, you're going to finance your purchase.
So what phrase can a TC use to do what they hate to do the most, which is ask for the payment, ask for the money? They hate doing that. So what have you heard in terms of what's the best way to introduce this question of, is patient financing something you'd be interested in? So what's the best, how do you language that if you're a TC who doesn't asking for money?
Margaret, I know it's a thing that they don't want to do, but it's really just asking the patient, here's your cost. Would you like to finance this purchase? And because that's the only way to present that, right, is just to use that firm. We have healthcare financing in place, and we can stretch this out. I think the biggest thing is the terms of years, right? And we go out to 12 years, for example. But if you can offer that way of, we need to get this done, we can finance this, and we can guarantee your payments could be here, because we can do that. That I think that'll help the patient a lot. Yeah, because I think anytime anybody have a big purchase that's a big cost, statistics tells us that the average American don't have $500 in savings, right? So when an emergency come up, you don't have $500 in savings, right, you're not going to get anything done. And so you have to have credit, right? Some way, somehow to get things done. And we're just calling it what it is, right? Is let's get you financed. Let's see if we can get you financed. And now for us, this is interesting because it is embarrassing. One of the things that we designed was, for our platform, if a person can send a text or an email, that's all they do. It doesn't matter if a practice have constant turnover. Our training is so simple. Everything is digital. They put in a phone number. It says the application to a patient. They can do that 30 days in advance. Once the patient put in their information, they get offers instantly, and they can go down and choose what they want. And
it's like it's a pre-qualification.
Yeah, it's a soft credit pool, and our soft credit pool is real. Whatever it shows up in that soft credit pool, you know how you get something in the mail that says, oh, you qualify for $1 million. You say, really? Right? But if you send that in, you don't get $1 million. For us, it's not like that. If they qualify for that on a soft credit pool, only the patient sees that. And so there's no embarrassment. If the patient doesn't get approved, there's no embarrassment as well. The patient could say, hey, I just decided not to do it. And in practice, it's simply out the dark because they don't know the offers that the patient has.
Hey, sorry to interrupt the show, but we got a quick segment for you that's called Ask Gary, and we have some people that have been sending in marketing questions that I think will really help you. If you'd want to send in your question, all you have to do is send in an email to askgary@smcnational.com, or you can leave a comment or DM us, and we're happy to answer it that way too. So today's question comes in from George, and his question is, what does a good marketing budget look like as far as the dollar amount? And if this is a really hard question to answer because it really depends on what your goals goals are. So I'm not going to answer it in dollars, but I'm going to answer it in percentage. Rule number one is never ask a marketing guy, how much should we spend? That is the worst thing you can ask them because they want to spend to the moon, right? Really what you should be looking at is the percentage of your total revenue in marketing budget. So you want to take a percentage. So 1 to 2% of your total revenue is a really small marketing budget, and you're probably not going to grow. So if you make $100,000 in total revenue every single month, 1% of that is going to be $1,000. 2% would be $2,000. If you are going to really want to grow, you have to be above 3% or more to be able to grow. And if you want to really see explosive growth, usually that's going to be in that 4 to 7% range. Now, when you get into massive growth or really needing to like add an associate or you added a bunch of new operatories that you need to fill, you added new hygienists that you need to fill their schedule, then that's when you get into that like 6 to 10% range. And that's the general range, 1 to 10%, depending on what you're trying to do. Obviously, this is for GP. When you get into like full arch marketing, your budget can be as high as 20% of your total revenue because that's a totally different beast. So hopefully that helps you.
You know what, Johnny? I want to clarify something that you said, Margaret. You said a pre-qualification. So what Johnny is explaining is as soon as the patient fills out the application on their cellular device and they submit, let's say they're approved for $30,000. Well, that offer is real. The next step is choosing the loan product that is inside of their portal. So it's not a two-step approach, meaning, oh, you pre-qualify for a certain amount. Okay, we need more information. We get that up front.
I have to tell you, one of the Clear Choice secrets from almost day one, no, actually it was about 2 years in, is we were able to do a soft credit pull for people who scheduled appointments and pre-qualify them. And it was hugely impactful.
Absolutely.
To revenue. Hugely.
Absolutely.
Yeah.
Absolutely. It is what you want. I think any financing company should be doing that today, allowing the merchant that they work with to pre-qualify so you know what you're dealing with. I mean, and then, it could be $10,000, right? And maybe the person needs $20,000 worth of work, but I can take care of this with $10,000. And for us, one thing that is different is we don't actually income from the patient. We actually income in a total household. So if the spouse work, the kids work, or whatever, once that patient put that down, we count that, and we don't have to verify that. And we typically give, if a patient asks for $10,000, we typically give 20% above that for the practice, so they can have that in case there's something else that needs to be done.
Awesome. So real quickly, Johnny or Michael, if someone wants to learn more about this, how can they get in touch with you guys?
They can visit our website at www.lakeliberty.co. That's LAKELIBERTY.co. They can fill out.
Awesome. We'll include that down.
Say that one more time.
Okay, great. We'll make sure to include that in the show notes down below. So if you're listening to this, you want to get in touch with them. And Margaret, why don't you give an easy way for people to reach out to you if they want to have somebody that helps them with their full arch and processes and operations inside of their practices?
Yeah, thanks, Gary. So it's Margaret, MARGARET at I3Ignite. So the letter I, the number 3, and then the word ignite.com.
Awesome job, guys. Thanks so much for coming on.
Yeah.
Hey, thanks, Gary.